Nobody gave you a roadmap for this. Your parents did not have one, and your school did not teach it. The financial system was not designed with you in mind. And yet, there is one asset that just by studying it starts to fill in that gap. By the end of this video, I think you will understand why. Hi, I'm Dr. Hunter Allbright, Chief Revenue Officer at SALT, former banking executive and professor at the University of Colorado Boulder. Now, for nearly 30 years, I've worked at the intersection of credit, analytics, and emerging technology. From leading global portfolios in traditional finance to building Bitcoin-backed lending infrastructure today. This channel is about thinking clearly in a noisy world, understanding Bitcoin through structure, risk, incentives, and long-term value. If you're thinking about investing for the first time, you're probably asking one big question. Where do I even start? Stocks, real estate, index funds, crypto? And somewhere in your research, Bitcoin shows up. Now, for some people, this feels exciting, and for others, it's confusing and daunting. And for many, it feels risky. But here's the case I want to make today. Bitcoin may be the most logical first investment you can study. Not because it's flashy, but because it forces you to understand money itself. This isn't about hype, it's all about foundations. So let's break it down. Most people start investing without ever understanding a number of things. What money actually is, why inflation exists, how central banks operate, and why assets go up over time. They just buy something and hope it grows. But Bitcoin forces you to ask better questions. For example, what makes money valuable? Why does scarcity matter? Why does supply expansion affect purchasing power? And who controls the monetary system? When you study Bitcoin, you're actually studying monetary history, incentive structures, game theory, and supply and demand mechanics. It's not just an asset. It's actually a master class in economics. And that is a powerful first investment. Now, that might surprise you, but let's take a look at why. Stocks require earnings report, management teams, competitive landscapes, industry cycles, and real estate requires tenants, maintenance, financing, local market knowledge. Even index funds require understanding of allocation, rebalancing, global macro exposure. But Bitcoin, it has a fixed supply of 21 million, a predictable issuance schedule, a decentralized network, no CEO, no earnings reports, no board of directors. It either continues to be adopted or it doesn't. It's binary, it's transparent, it's simple. And simplicity is powerful when you're starting out. Most first-time investors think short-term. Will this go up next month? Will this go up in the next 6 months? Is this a good time to buy? What if it crashes? Bitcoin historically has rewarded one behavior above all else, and that's patience. It's volatile in the short term, but it's historically powerful over the long term. And when you study Bitcoin cycles, you quickly realize that short-term speculation is noise. And long-term conviction is where wealth is built. Now, that mental shift alone can change your entire investment philosophy, and that's a foundational lesson. There's no revenue growth to model, no executive team to bet on, no government policy that can increase its supply. The supply is fixed. The only variable is demand. That makes Bitcoin one of the cleanest economic experiments that have ever been created. If more people want it, prices rise. If fewer people want it, prices fall. That clarity forces you to understand the market psychology, the adoption curves, and scarcity in a very real way. As a first investment, that is an incredible learning tool. You don't need $50,000 for a down payment, access to private equity, a brokerage account with complex approvals. You can actually start small. You can buy fractions of a Bitcoin. You can participate in a global monetary network with very little capital. That accessibility is one of the most democratized investments ever created. For someone just starting on their journey, that really matters. So let's be clear. Bitcoin is volatile, and volatility is uncomfortable. But within that discomfort, it can teach you something incredibly important early on as you begin investing. How do you react when your asset drops 20%, 40%, or even 60%? Most people don't discover their true risk tolerance until it's too late. Bitcoin exposes that early, and that education is invaluable. Now, if you can hold through volatility, you develop emotional discipline that applies to every other investment you'll ever own. So here's where it gets deeper. Most assets are priced in dollars, and Bitcoin challenges the dollar itself. It asks, what if money had a fixed supply? What if it couldn't be inflated? What if it operated outside of political systems? Now, whether you agree with it or not, studying Bitcoin forces you to understand concepts like inflation, monetary debasement, sovereignty, global capital flows. And that knowledge alone makes you a more sophisticated investor across all asset classes. Now, important distinction to make. Considering Bitcoin as your first investment doesn't mean putting 100% of your net worth into it, ignoring diversification, abandoning other asset classes. It actually means starting with something that teaches you foundational principles, such as scarcity, incentives, monetary policy, market cycles, and long-term conviction. From there, you can branch into equities, real estate, bonds, and private markets. But you'll do it with a stronger framework. Here's the truth. Your first investment shapes how you think about wealth forever. If you start with speculation, you become a trader. If you start with yield chasing, you become reactive. If you start with understanding money, you become strategic. Bitcoin isn't just about the price. It's about understanding the rules of the game. And once you understand the game, you invest differently. So, should Bitcoin be your first investment? Not unless you understand it. Not because it's trendy, not because it's volatile, not because someone promised huge returns, but because studying and owning even a small amount forces you to understand what money is, why scarcity matters, how markets function, and how to think long term. That's what foundations are for. And if you're building a strong financial foundation, Bitcoin is worth serious consideration. If this was helpful, we invite you to subscribe to the Bitcoin Advantage channel. Here, we're breaking down Bitcoin from first principles. No hype, no jargon, just clear education. I'll see you in the next one.